How's it going, everyone? It's Sam. I want to tell you about a list of stocks that I think have a lot of growth potential in front of them. Some of them ARK Invest has been buying. I've been buying all of these stocks, and I think some are undervalued. Some are just presenting a lot of upside. Some are kind of unknown at this point and are trading at a little bit of a discount. So I'll explain every single stock, what they do, why I think it's a good value, and where I think it could go in the future. If you guys like this, please leave a thumbs up. I really appreciate it. Also, if you want to see every video, you can definitely hit subscribe down there. I really appreciate that. We do videos like this every day, so definitely check that out. Also, if you want to get some free stocks through WeBull, you can definitely check out the link below. Get 4 free stocks as long as you deposit $100. So definitely get that because this won't last forever. They are giving out a lot of money, so definitely check out that link. And if you want to join our Patreon so you can see exactly which of these stocks I'm buying and when, you can definitely check out the link down below. I tell them exactly what I'm buying and when, so definitely check that out. So the first company on this list is one that you might not have considered as a growth stock, and I'm going to get to more growth at the end, but more risk at the end. So the first one on this list, I think, is one that a lot of people have thought of as a brick and mortar, but they're changing over their business a lot. And again, I'll get to the high growth stuff here in a second. But the first one is Walt Disney. So this is a sleeper that I think people just aren't realizing the potential, but you can see they haven't had any giant jumps, or maybe not a ton of giant jumps over the last month, but they're up 23.5% this month alone. Over the 6 months, they dropped all the way down to $110 a share back in June. They're up 41% from there, and they fell to $85 a share, and they're up 80% since then. I don't think people realize that this company is becoming a streaming company, and you can't think of them the same way that you did a year ago when they were around the same price. I mean, we're at all-time highs. I think this company has a lot of potential with or without the pandemic. If we get away from the pandemic, that just means that they're going to be able to make a lot of money on their parks. And if we stay in the pandemic, that means that they're going to be able to continue to get more and more streaming clients and people that are buying their new streaming service. They're up to 73 million paid subscribers. This is a company that I think a lot of people are still sleeping on. And I think eventually people will realize this company should be valued higher. The next stock on this list is another one that's a little bit conservative. JP Morgan Chase. I think that they can double over the next 3 to 5 years. Jeremy from Financial Education just did a video on this, and I think that this is a great company. I've been buying since below 100. I think I was buying around 90-ish, but I think JP Morgan Chase is a great store of value. They earn so much money. If you just take their last quarter and multiply it by 4, their PE ratio would be around 10. Again, I think this company will probably double in the next 3 to 5 years, and I think people will start to value it a little bit higher. So P ratio around 20 would not be unheard of, and that's assuming they don't, increase their revenue and their net income anymore. That would double their price from where it is now. I think, like Jeremy said yesterday, it's an easy money stock. It makes so much sense. I've been buying since the pandemic started, and I really like the company. Since the bottoms, it is up, but we're still down about 12% or so on the year. The next company is Teladoc. I've been buying this one for a little while now. I'm up maybe 10, 15%. This is a telehealth company that has really expanded its reach during the pandemic. And a lot of people were worried for a little while there that because the pandemic was ending, that this stock wouldn't do as well. And it fell. It's still down about 20% from its highs. I don't think this is going anywhere though, because this is a lot more efficient. This is a lot faster. This saves a lot more money than typical healthcare. And I think it offers a lot more value to clients. So instead of having to spend 2.5 hours trying to get to a doctor's office, sit, wait, fill out papers and everything, you can just call them up on your phone. It's a lot quicker, a lot safer, a lot cheaper. I think this is a company you should definitely take a look at. The next stock is one that I just bought this week for the first time, and it's Fubo TV. This is a really interesting stock that not too many people know about still. It's still a small market cap, but you can see here it's moved up almost 100% in just the last month. This company just announced that they are acquiring a gambling company. So Fubo basically does live streaming for sports in 4K. It's better known, I think, outside of the US, but maybe here in the US you've heard about it too. But they just acquired, or they just announced that they're going to acquire a sports betting company. So to me, that makes so much sense to have the sports betting on the same platform as your streaming, because you can literally just watch it on TV or watch on your computer and then start putting bets in. I think that's genius. I want to invest more in this company over the long term. I think it's going to do really well. The next company is PSTH. I've talked about this a couple times. It is the largest SPAC ever, so the largest special purpose acquisition company. It's run by Bill Ackman. He is someone that's done really well recently, investing-wise. He's a billionaire hedge fund guy. He will most likely buy something that is at a pretty good value because he's investing $4.5 billion. He doesn't want to make a lot of people upset. There is another billionaire that's put, I believe it was $400 million worth of his own money into this company. So he owns basically 10% of it. I think this company will be able to get what they call a mature unicorn. That's what they're going after. Something that has high cash flow, is hard to get into, and they're purchasing at a little bit of a discount. Again, this started at $20 a share. So it is only up about 30% or so since it started off. And I think this will go up a lot once they announce whoever they're merging with. The next company is Social Capital, or IPOB. So they are merging with Opendoor. And this is a company that ARK Invest has been buying heavily. They own about $70 million worth. ARK Invest is a really well-known ETF and mutual fund company. I think that this company will do really well. Opendoor has a lot of upside to it. I'm a little bit upset that I got in this late, but you can see with a lot of these SPACs, they run up very quickly and then they fall off and then they come back. We've seen that with some other companies too, but I think that this is a good option. The person that set up IPOB is the same person that helped with the Virgin Galactic merger. So Virgin Galactic went public recently too. So I think that that offers it a little edge up because they've already done a good SPAC merger in the past. Virgin Galactic has done really well. So I think that's something to consider. And now the next one is a stock that's pretty similar. It's IPOC. So it's run by the same person that did the last merger. So IPOB and IPOC, they're run by the same guy. But this company hasn't exactly come out with who they're going to merge with, but it's the next SPAC that he has in a list of 26 SPACs that he wants to complete. So I think that this offers some upside because we've seen Virgin Galactic do well. We've seen IPOB do well. This company is kind of an unknown at this point. So I think it does offer upside eventually if they're able to merge with someone that is quality. And I think they'll want to keep the money that they've raised. So I think that that's a company to consider. And then kind of along similar lines, the person that started Virgin Galactic, the founder, has created a SPAC called VGAC. And I think that they're going to offer some upside too. I have a small position in some of these more speculative SPACs, but he has talked about how he possibly wants to get into EV and how he doesn't think there's going to be any ICE vehicles on the road down the line. So this company offers a potential EV play. Now, again, they have not talked about who they're going to merge with either. They have not come out with it. But again, with these SPACs, they don't want to lose their money. They don't want to lose their funding. So they have to find someone within 2 years to merge with. So I think that these companies offer a lot of upside while limiting downside because they rarely fall under $10 a share. Let me know your thoughts on these companies down below. Let me know which ones you like the most. Obviously, the ones at the beginning are a little bit less high growth and a lot better known, while the ones at the end are kind of the sleepers, the ones that no one knows what's going to happen with, but offer a little bit more upside, a little bit more risk though. So let me know, again, which ones you guys like the most. Thank you guys so much for watching. Thank you for hitting the like button and checking out WeBull. And if you want to see my Instagram too, you can check it out down below. I have it linked down there if you want to see, I put up some thumbnails early. I put up some other photos, so definitely check that out. Thank you guys so much. I appreciate it. And if you want to see a video on something that ARK Invest is doing that I just started doing, it's a strategy for these SPACs. Definitely check out this video on the end screen. Thank you guys so much. I appreciate it, and I'll see you in this video.